Good morning. I am Kevin Price. Delighted to be with you. Going to spend some time talking to you about you and your business. As usual, I have a lot to cover on today's program, and love talking to a relatively new but phenomenal contributor to our program, Sandra Finch, and she's a CPA, and a CPA with a great story. I do want to mention right away her website, Finch, F-I-N-C-H, CPAfirm.com. Sandra, before we get to our topic, which I think is really timely, every American out there should be aware of this important topic you're going to be bringing to us. But before you get into that, tell us a little bit about yourself and your practice.
Oh, my practice is in North Houston, actually in Spring. I have an incredible team of people that I've spent quite a while putting together. And we do the whole gamut. We do financial statements for your business. We do bookkeeping at any level that you need. We can do accounts payable, accounts receivable, and then we do a lot of tax returns and tax planning. We do estates and trusts, and I'm a certified financial planner. So, and that's my love, is to take the entire picture of a business owner or just a couple or an individual and just sort of let them design their own financial life. And as you know, I love to educate people. I am a fee-based financial planner. I don't get commissions except for one thing, which is the thing we're going to be talking about today. But I love to educate people and let them see all of the little widgets that they can use for their financial and tax life, and let them pick out what they would like, kind of from a little smorgasbord.
Yeah, I like that. And one of the hot items that you mentioned to me before, which is our theme today, is long-term care. Talk a little bit about, first of all, what it is, and and really what the options are if people don't go ahead and plan for it in advance. And let me tell the listener, those aren't very attractive options.
No, they're not. And nobody wants to think about this stuff, but once it's time to think about it, it's too late, Kevin. It's if you have, some blips on the screen for maybe a little heart attack, you needed a stent or something, you've got to wait 2 years to even sign up for long-term care insurance. And long-term care insurance, most people think that means nursing home insurance, and it does, and it doesn't. It's also the type of insurance that can keep you out of a nursing home. Maybe you want to bring in skilled nursing care, and maybe you don't have something terminal. Maybe you have something that just lasts 6 months to a year or something. You're recovering from, God forbid, a stroke or something like that. But it certainly gives you so many options as to what sort of facility you can go into and what you can, what you can do. Of course, you have loved ones. You have loved ones who can care for you, but they probably need to care for their own families. There's an old saying that the caregiver is the next one to be sick.
Yes, and it can happen at any time. There's a high likelihood in those scenarios that the caregiver is comparably aged and therefore comparably vulnerable to the one who currently needs care.
Absolutely. I mean, can you imagine, trying to lift someone who's fallen and you're, basically the same age and maybe you don't have any more strength than they do? It's just a sad situation to be in. And the thing is, most people think, well, I can't buy long-term care insurance because it's too expensive. And I'll tell you, I'm looking at a policy for a 55-year-old woman in good health, now without the inflation rider, which we could talk about. The premium is only $145 a month. And this woman happens to have her own business, and so that is a deductible premium. So she's really, after taxes, going to pay, somewhere around $100, $110 a month. And this is to get a $200 per day benefit if she needs long-term care.
Yes, and that's huge. That's huge. I mean, think about that. And the likelihood of needing long-term care. In fact, thanks to medical technology, the number of people who are going to need long-term care is just off the chart. I think I've read somewhere around 1 in 3 or 1 in 4, somewhere in that neighborhood.
I've got 7 out of 10 was the last thing I saw.
Yeah, my math isn't good enough, but that's even higher than what I'm saying. So that's well more than half. And so That's incredible when you think about it.
Well, it is. I mean, there's insurance that you buy every day, car insurance and house insurance, and all of the best financial planners will say there's the two kinds that are the most important are the long-term care insurance and disability insurance, because if you're sick and you're still working, you can't really, how do you replace your own income if you don't have disability income? If you're still working and your house burns down, you could work to build a house back, or your car gets wrecked or whatever. But the only kinds of insurance you're definitely ever going to use are life insurance, because you know you're going to die, or long-term care has a pretty good chance that you're going to use it, because as you said, we're living longer, and there's going to be times maybe where we can't do it on our own as we make it into the 90s or even 100.
Yeah, and a lot of our baby boomer friends, which I'm in that generation too, but I was a pretty teetoting baby boomer, I'm glad to say. But I got friends of mine who weren't quite as genteel on themselves, who are the physiological equivalent of 70-year-olds and are roughly my age because of how they lived when they were younger. And baby boomers in particular were really rough. And again, the technology is there to sustain people, but not to ensure necessarily a very high quality of life.
That's true. And I think there's, the 70s, it's true, we're not kind to a lot of us. I was kind of a teetotaler too, but I do know people that are in that same boat that you're talking about, and I hope they've already gotten on the long-term care train, to get something in place. There's a lot of sometimes I'll hear, well, but if I don't need it, I'll never see that money again, and I can understand that, but what I've gotten to see recently is a hybrid policy that just blows my mind, because it's a life insurance policy with a long-term care insurance rider on it. So, and it has a timeout period where you don't pay this forever. You pay it for 5 years, and then, but from day one, you have additional life insurance for your spouse or your loved ones, but you also have double that amount in long-term care benefits, which if you use the long-term care benefits, then it does decrease the death benefit. But if you don't, the death benefit just stays there, and it passes on to your spouse or your other loved ones. So
you got to love that. Sandra Finch, she is a regular on the program. Finch, F-I-N-C-H, CPAfirm.com. You can tell why we like to spend time with her. Thanks so much. Great as usual.
Thank you, Kevin. Have a good day.
You too. When we come back, much more for you. And you're listening to The Price of Business.